Everyone's chasing the
after
next big
stocks that the
AI
crowd is
stock.
chasing after.
But
It's a
what if
different
that's the
approach
biggest
to
mistake
looking at
investors are
investing in
making right
AI.
now?
Every new technology brings creative potential and it brings destructive potential.
Potential that applies to every stock in the market.
Look for the companies, the solid companies that are already dominant in their marketplace that are now integrating AI into their operations.
Eric Fry with Investor Place breaks down the AI impact into 4 categories.
These are the companies that enable or supply some irreplaceable aspect of the human experience.
He shares specific stocks in each category that are set to see some major upside as the AI rollout continues. Let's dive in.
Breaking insight. Don't follow the crowd. The real winners in the AI revolution aren't the flashy startups everyone's hyping. They're the giants already dominating their markets, the ones quietly weaving AI into everything they do. This is where creative power meets financial dominance. Miss this shift, and you'll miss the decade's biggest opportunity.
Eric, so great to have you on the show, talking about the thing that every investor is talking about and has been talking about, that is AI. And I think we had such a strong earnings season in a lot of the big names, but already this week, we started to see some change happening in the sector.
Absolutely. I mean, AI has been the topic for at least a couple of years, ever since ChatGPT emerged into the world. And it's no less a topic now, but the dynamics of how to invest in AI are definitely shifting.
Yeah, and I think part of that has to do with kind of where we are in the phase of the rollout of AI. Some people think, oh, AI is over, it's already done. Others say it's really just beginning. Where would you say we are as far for investors? Where is AI in the phase of build out?
There's a wave where the initial phase of any new technology focuses around the builders, the creators of that technology. So in the AI world, that would include or primarily feature the high profile names like NVIDIA, like Amazon, like Meta, et cetera. As that infrastructure, sort of expands, there will be other forms of AI investment that I expect to flourish. And I've actually broken it down into 4 categories of AI investment, sort of a way to view the world through the lens of AI. So the builders would be the first category. The second category would be the enablers. That would be any company that facilitates the build out. That'd include anything from like a mining company that provides some of the metals that are actually used in the hardware to real estate firms that provide the specific properties for data centers, to the construction companies that build data centers, to the power companies of all types that power data centers. Then we move to the appliers, huge category. Any company almost could be an AI applier. And then finally, we have the AI survivors. These are the companies that have a business that is largely or completely immune to the destructive side of AI.
We talk so much about all of the investment in AI and all the changes it's going to have in the world. And a lot of that is positive talk about this is really revolutionary. But we even hear from some viewers in the comments from time to time, this is a little scary. And what does this mean for jobs? What does this mean for other companies? Is that what you're talking about here a little bit?
In the history of civilization, every new technology brings creative potential and it brings destructive potential. And that goes back, I don't know, maybe it goes back to fire, but at least goes back to the Industrial Revolution, where machines replaced human workers. AI is those past examples on steroids, really. So yes, there's going to be a job destroying side of AI. There will be a job creating side of AI. And I am not anywhere close to smart enough to know how severe the destruction is going to be or how robust the creation is going to be.
Every new technology brings both creation and destruction. And AI is no different. Some companies will rise to unimaginable heights, while others will crumble. Don't chase the hype. Analyze integration. Look for the companies that are already profitable, already dominant, and now using AI to optimize, scale, and innovate. That's where stability meets explosive potential. Think of AI not as a new wave, but as a force amplifying every wave that already exists. The question is, will you ride it or get wiped out by it?
Buy and what to buy. Those are always important things to look at. But what you have for our viewers today on our channel, Eric, is a look at these 4 sectors of AI that you just kind of described for us, and some specific stocks in those 4 areas that have a lot of room to run yet in the AI story. So let's get right to that first sector that you talked about in the AI story.
Sure. So generally speaking, the AI builders category is the most we call it overbought, the most picked through. There's not a lot left in that area at the moment. There's still opportunity there, but as I said, that's the first wave of the AI phenomenon, and it includes all the big names. So I don't think Amazon or NVIDIA or any of those companies are going to zero, but I do think they face a runway here of massive renewed investment to maintain their lead in the AI world. And so that's basically earnings negative. That creates a huge headwind. So I don't expect those stocks as a group to do very well over the next 2 or 3 years. In general, I stay away from that group and I say, okay, let's move on to the next 3 categories. So the AI enablers, the AI appliers, and the AI survivors. And in those categories, if we begin with AI enablers, there's a company called Teradyne that I like quite a bit. Core business of that company is to sell semiconductor test equipment, and that's very much in need now as companies are ramping up production of chips for AI chips for all manner of AI technology. So that core business is doing great. And then it has a robotics subsidiary that is currently in a partnership with Amazon selling robots, automation equipment for warehouses to Amazon. That is a booming business, and it's only about 15% of the company's total revenue, but it's growing very rapidly. So here's a company in the center of the semiconductor industry, and also with a huge robotics component.
Yeah, this is a name that recently came up on one of our list of robotic stocks to watch. So it's been on the channel once before, but I think what is such a good concept that you bring up with this one is instead of like the builders that once the build out is done, their profitability kind of goes down, their growth level. It's not so much that rapid growth, but Teradyne definitely seems like a company that's going to continue to be in demand for many years to come. That's what makes a lot of sense with this one.
It's a really unique kind of hybrid play in that it's part builder and it's part enabler, but the company really finds itself in the sweet spot of the next phase of the AI boom. So I like the company a lot.
That's a really great first stock to look at. Let's get on to that second category of AI growth that you want to talk about today.
That would be an AI applier. And essentially an AI applier is any company that is not just attempting to apply AI to some facet of its business, but is successfully applying it. Many companies are sort of groping in the dark, trying to figure out how to use this new thing called AI, and they're not really figuring it out yet. And they certainly haven't figured it out in a way that expands profit margin, which is the main thing that I look for in this the first phase here. You want to see a company where you can quantifiably say, oh, I see AI is working because profit margins are increasing. If that's not happening, you don't really have anything yet. But in that area, any company can theoretically apply AI to improve its business. So one example of that is PayPal. It's an established company, obviously one of the biggest payment processors in the world, and it's been around for a long time. It hit a sort of a no growth phase, but now the company is applying AI to across its entire infrastructure, which enables it to more successfully detect fraud, confirm payments, approve loans. So all of that is incrementally boosting the profitability, the efficiency of each of those areas. And so on the same body of transactions, the company is able to extract more profit and to also build a stronger competitive moat.
I think the applier category is really interesting to look at in the AI growth story because it doesn't have to be a pure play AI company, a company that just formed because of what they're developing in AI. This is a long-standing company that's using AI in a way that's going to help grow it. I'm just thinking of some other names that might apply in that category. Are there some other examples that you could think of? They don't have to be specific stock recommendations, but there just seems like a wide range of companies.
Absolutely. So, and many of them are counterintuitive. In my investment services, I've identified companies from all walks of life. So, a train manufacturer, a bus manufacturer, a mining company. There are companies all over that are finding ways to embrace and integrate AI into their processes. Just for kicks, I'll tell you the train manufacturer is Alstom. It's the largest rolling stock manufacturer in the Western world, and it has been integrating AI into all aspects of its systems, signaling, preventative maintenance, etc. So again, old school business, you would never think of a train company as being an AI company, but it is.
Yeah, before we move on to the next category, another follow-up question with these old school companies that you're talking about. And I appreciate that you caveated PayPal with you don't expect it to triple anytime soon, but how much of an impact could this AI applications that they're doing have for these businesses? How much upside could this bring for investors?
Well, I think it's pretty substantial because you're talking about sort of a war of attrition. I mean, if you simply identify a company that is integrating AI in a way that enables it to expand market share, that enables it to survive the onslaught of AI, that right there is a victory. And once a company establishes a larger presence in whatever market it's operating in, then margins can expand and then profits can go up, and you can be shocked at how well a boring company can do. We saw it in the aftermath of the dot-com bust. There were a lot of sort of old school companies that figured out a way to integrate this new technology called the internet. And then many of those companies went on within a sort of 5-10 year period to go up 300, 400, 500, many of them over 1,000%. And if you looked at those companies in 2002 or 3, when they're in the middle of the bottom of the bust, you wouldn't think that they were going to be doing that, but they did.
Yeah, such a great comparison of the impact that the internet had on businesses, but it also had a similar impact to what AI could have too. And that's the internet may have killed some businesses that weren't ready to implement it well, that took away some of their business. And so I think this next category of AI is a very good one to think about as an investor. And that's who's going to survive and thrive once AI is more mainstream across the globe, and who might not survive this
Right.
implementation of AI.
Yeah, the internet boom bust is really a dress rehearsal for this AI boom that we're seeing, and there are many parallels that are important to keep in mind. I'll say this about identifying losers. A lot of people think that you need a great big hit in order to build wealth, but that's not entirely true. You need to avoid big losers as well. Avoiding losers is almost as important as finding winners. My whole strategy focuses on not just what's the upside of something, what's the downside of something. So that's why earlier I was talking about steering clear of NVIDIA and Amazon and so on, not because they're terrible companies. They're great companies. They're fantastic companies. But the stock price is, as my old colleague used to say, they're priced for perfection. And so your upside potential seems relatively small compared to the downside risk. As far as what will be harmed in the internet era, I think of a company like Manpower, which is a sort of an old school jobs company, right? You're linking employers with employees, and you have humans in the middle to make that happen. But that model is old, right? So Manpower competes against companies like Indeed and Upwork and so on, where they're online and employers and employees can link to each other with no intermediary. So Manpower might be able, it's trying to adapt to this new world, but it has an established model that is very difficult to unwind. So I see companies like that are dependent upon human intermediaries as being the first victims of the AI phenomenon.
Such a good point that if you've got this established model, unless you can adapt quickly, it's going to be really hard for that business to do well. What's an example of a survivor that you think could do well in the changing landscape of AI?
So this is my favorite category, just because it's a category where investors are least focused at the moment. I don't know for a fact it's going to be the best category, but if you're a romantic at all, you're going to like this category. These are the companies that enable or supply some irreplaceable aspect of the human experience. So I'll mention Dutch Brothers as an example. Dutch Brothers, up and coming coffee company, competing with Starbucks. And that's a company where the human touch is very important. People aren't just going there for coffee. They're going there to talk to the barista and get a good vibe in the morning and so on. So it's the kind of experience that should not only survive the AI world, but also gain a premium, because the more that AI infiltrates our world, the less human it becomes, the more that humans will want human interaction. So that leads us to things like travel and tourism, anything in hospitality. So I'm very focused on those areas as well. And I think companies in the survivor category have huge potential.
Yeah, that's really sound logic that the more AI is integrated, the more people are going to be searching out. Consumers are looking for the human experience. Great point to make. And I think Dutch Brothers is an interesting pick too. I've loved this discussion on the different categories and different ways to think about AI and all the areas of the market it might impact. And I also think it's so important to think about what stocks not to get into right now because the downside risk is there. And also, there just isn't as much growth potential. Again, you cover that really, really well in your special report. I've got that QR code up here again and the link in the description for anyone who's interested in diving more into Eric's research into these different categories of AI and which companies you want to steer clear of right now. That's just as valuable as some of the other names he shares in this report, which are the companies that you really want to look at getting real growth opportunities as AI is fully implemented more and more over the coming months and years. Eric, such an interesting conversation today. Anything on AI investing and really just investing in general and what retail investors should keep in mind on how AI is going to impact really the entire market?
I would just say to learn from history. You don't chase after the stocks that the crowd is chasing after. I think the safest place to be operating right now, even though I like the survivors category a lot, is really the AI appliers. Look for the companies, the solid companies that are already dominant in their marketplace that are now integrating AI into their operations to boost margins. Focus on the appliers.
Really solid advice for all our viewers today, Eric. Thank you so much for coming on and sharing some of your knowledge with us. I'd love to hear from you, the viewers, too. What are your thoughts on these 4 categories of AI? And did any other names and stock tickers come into mind when Eric was talking about these different ways to think about how AI is going to impact the market? We'd love to hear from you in the comments. Thanks again for joining us, everyone. And as always, happy investing.